All right, so profitable and effective trading psychology. Understanding the crypto market cycles and building the right mindset and psyche to stay sustainably profitable. Now, I'll start with a quote from one of the, in fact, the founder and CEO of the biggest, arguably the biggest trading exchange, crypto trading exchange in the world, Changpeng Zhao, popularly known as CZ Binance. Recently, he was interviewed and he said that crypto is a technology, not a currency, and not a commodity. It is an innovation, and innovation cannot be stopped. It's an innovation, and innovation cannot be stopped. Now, what is an innovation? That's the point we need to understand here. When do we say something is an innovation? So you can look at it from two perspectives. One says innovations, or an innovation is a practical implementation of an idea that results in the introduction of new goods and services or improvement in already existing goods and services. Practical implementation of an idea. I want you to take note of those words, because sometimes people see this crypto and blockchain industry as something, what will I say? It's like something non-tangible or something that is just hanging on the internet. It doesn't really have any practical use or any practical applications. But understanding that crypto is an innovation, it's a technology, a practical implementation of ideas that result in the introduction of goods and services or improvement in already existing goods and services, that tell you that it is not something that is just sitting somewhere on the internet online with no practical use. Okay, another way you can look at innovation is to see it as a new or changed entity, realizing or redistributing value. So either a new entity that is created or an improved entity that realizes or creates new value. Everything here is to let you understand that crypto is something that is here to stay. It's something with a good use case. It's something that has a purpose. It's something that is practical. And it's something that cannot just be killed. It's an innovation, and CZ says innovation cannot be stopped. But for us to be able to have the mindset of profitable traders or effective trading, let's first of all look at the bigger picture. Okay, we have so many markets, we have so many industries, so many asset classes. You can talk about real estate, you can talk about commodities like gold, silver, and all that. You can talk about the stock market, you can talk about forex trading. All these are different asset classes, different, what do you call that, industries. And no matter the market you find yourself in, every market experiences ups and downs. It's normal, it's a cycle, okay? And that's what we call the booms and the busts. Booms and busts. Every market, every industry experiences these two. It's a cycle. And what it simply means is that there are times when the market goes up, and as the market goes up, there are times the market goes down. We have this aphorism in cryptocurrency that whatever goes up must come down, and whatever comes down must go up. And it is not just in cryptocurrency, it's the natural law. Every market experiences that. Now, the only difference here is how long these up and downs take and how drastic they are. Because the cryptocurrency space is quite volatile, mostly its effect is more drastic than any other place. Even when you take our normal currencies, our fiat currencies, the dollar, the CD, the naira, all these cryptocurrencies in some way, all these fiat currencies, they also experience up and downs, but just it's always too insignificant that we don't even realize those subtle changes. But in a volatile space like the crypto space, where the change is always drastic, people tend to lose their standing, they tend to lose their confidence in the industry when we're experiencing the bad times. But know that Bad times comes and good times come. It's a cycle. They come and they go. Okay. But the most important thing we need to understand here is we have short-term rises and falls in every industry. But what you should look at to tell you if that particular industry has a future is to look at the long-term, more like the long-term graph or the long-term pattern. With the short terms and rises and falls, if you can look at the graph currently, you see that it rises and falls, but in the long term, the net growth is positive because it has an uptrend that it follows. So that tells you that this is something that can stand the test of time, and this is something that you can build and sustain. All right. And it's usually affected by so many factors. We have the micro market factors, okay? But most importantly, most of these cycles are driven by human emotions, emotions of fear and emotions of greed. Why do people panic and sell in the crypto market? Fear. When the market is booming, why do people sell to take profits? You can call it greed, okay? And sometimes when the market is also rising, people jump in and start buying things because they fear of missing out on something good. So by the end of the day, all these cycles are driven by human emotions of fear and greed, but we also have the micro market factors like you can see the money supply and then investor confidence and all that. So these are things that are normal. It's a cycle. It comes and it goes. It's normal. It has been happening over the years. Now, these are the emotions that mostly, regulate these cycles. So at the time that there's a positive sign that something good is about to happen, you see a lot of people become optimistic, people become excited, and everybody wants to be a part of it. So everybody is jumping inside. Everybody likes to be in the winning team. That's it. Everybody likes to stay in the winning team. So once they hear there's winning happening somewhere, you see everybody tripping there. Then everybody will get in and then fill up the place. But of course, it's natural that everything goes up to a peak and it comes down to a trough, then it rises again. Now, as the market starts dropping, people start becoming anxious. Some people are in denial that the market is not dropping. Then some people become afraid. Some people become desperate. Then before I realize, people start panicking. And that's when people start giving up. Some people give up. They even curse the people who introduce these opportunities to them. They feel like you deceive them and they've lost their money. People give up. People leave the industry and they never come back. Some leave, they come back very late when they realize that it was just a cycle. It was just something normal that was happening. But those who stay strong within the down times, eventually the cycle goes again from depression, then it starts going up, hope returns, people start getting relief, optimism returns back, then you go back to the same cycle of excitement, thrill, euphoria, anxiety. So it keeps going. So it's a cycle that keeps going on and on and on and on. Okay. So whatever you are seeing in the market now, that people may start panicking, please, it's a normal thing. It's normal. It's a cycle that keeps coming and going. And then as the presentation proceeds, I'm going to keep repeating the fact that it's a cycle and it's something that is normal and it keeps coming and going, so that can get into your head. If you leave this place and you don't remember anything, at least you should remember this. Okay. So far, if you are following, just type cycle. It's a cycle. Type something. It's a cycle. It's normal. Type something in the chat box. Let me know we are still together as I proceed. It's a cycle. It's a cycle. Type that in the chat box. It's a cycle. It's normal. Okay. Thank you, Bismarck. Thank you, Adam. It's a cycle. All right. Thank you, Rafael, Abu Bakar, Lukman. Okay. So let's understand that it's a cycle. It's something that's normal. Okay. There's something called the debt cycle. I am not sure if I should talk about that, but it's in economics. And the debt cycle simply talks about the fact that when people have access to financial, what do I call it? Financial support. So let's say in the form of loans, okay, people have access to money. What happens is that you see a lot of people going for loans. People start buying, going shopping. People are buying houses. People are buying a lot of goods, people buying cars and spending a lot of money. And as people are borrowing and spending this money, what happens is that the corporations, the big companies, they start making a lot of money. Somebody is drawing on the screen. Please stop it. These corporations start making a lot of money. And as they are making a lot of money, the government is also making a lot of money. So you realize that government also start doing a lot of projects. But now, at the bottom, as these people are borrowing and spending more, it gets to a point that their capacity to spend reduces. Okay, they can no longer spend as much as they used to. So the amount of things they used to buy and the level of their expenditure starts reducing. As this is reducing, companies are no longer getting the monies they used to get. Government is not getting the money it used to get from taxing these companies. They realize that the economy starts going down. So governments will what? Push in some money. Okay, this one is economics, that's finances that we don't want to get into today. But government pushes in money, makes some money available so that people can go in and pick more money again from the bank, start spending again. We go over the same cycle till we hit the top where people reach their spending limit, then everything comes down again. You keep going around the same cycle. This is called the debt cycle. You can check it up online, okay? And you understand that everything occurs in cycles. Every market, every industry, especially where money is involved, occurs in cycles. I think it even happens in relationships. That's another thing for another day. So that is what we need to understand here. Okay. Now, when we narrow it down to cryptocurrencies, in the cryptocurrency world, we have what we call the bear market and the bull market. Now, the names, why do they call one bear market and why do they call one bull market? How did they even come up with those names? There are so many theories. But just looking at the bull and the bear, when the bull is about to attack, what happens is that it goes down and then finds a firm standing, and then it swipes up to attack its prey. That's how the bull attacks. So that's why the bull market, we use the bull market to represent uptrend, because it goes down and it attacks upwards. When the bear is to attack, it stands up and it swipes down at its target. So bear stands, strikes down. So bear market goes down, bull market goes up. So that's just a theory about how we possibly came about those names. It's just a fun fact. It doesn't really add anything to today's presentation. So what is a bear market? We said a bear market is a market condition in which prices are going down or expected to go down. And this is often shrouded in widespread pessimism and negativity. So people are a little bit of downturn in the market, then you see that people feel like the whole market is going to crash. So people start selling all their cryptocurrencies. People start taking their monies out of the market, and everybody is thinking like they are going to lose all their money. So widespread pessimism. And that further drives the prices down and down and down to a certain point where it can no longer, it hits rock bottom, then it starts rising back again. So bear markets or bear seasons are when prices are going down or are expected to go down, okay? And a bull market, so we have, with the bear markets, there are about 3 types. I'm not going to go into details of that today, but we have about 3 types of bear market. We have the regular one, which is what so far we've been experiencing. And we have the hyperinflation, where the prices of most of the cryptocurrencies literally stay at the same level or appear to be rising. But when you compare the value of your cryptocurrencies to the actual cost of living, as in how much physical goods and services can you afford with your cryptocurrency, you realize that when you look at it at that perspective, though the price of cryptocurrencies stay at the same, but in terms of their value for physical, in exchange for physical goods and services, their value has reduced drastically. We call that a hyperinflation bear market. Of course, depression bear market is where the whole globe, we have a global economic depression, which actually also catches up with the crypto market. So that one is usually a general thing. Now, what's a bull market? Bull market is the opposite of a bear market. So a bull market is the market condition where prices are going up or expected to rise. Okay, and just the opposite of bear markets, here we have generalized optimism. Okay, there's generalized optimism and positivity. A lot of good news is there. People are expecting that the market will go up. Some people are making money, so everybody is happy and excited. There's optimism, there's excitement, there's euphoria. Everybody is happy and everybody is pushing money in. People are taking profit. The market is going up. We call that a bull market. Bull market and bear markets are often dependent on duration. So when you have an extended duration of a fall in prices to a certain limit, very, very deep fall over an extended period of time, we have a bear market. And bull market is when you have a continuous rise in price over an extended period of time, where people sometimes can make sometimes over 500%, over 1,000% of their capital, and the market keeps going up extended period of time. All right. So the question is, what drives these bull and bear markets? Already we mentioned that in any market, the booms and the busts are usually, regulated or determined by human emotions and certain micro market factors. So when it comes to the crypto market industry, we have other factors also playing in here. The same human emotions apply, but there's this theory that when you look at the trend of cryptocurrency rise and fall, the bear markets and the bull markets, they seem to sync with what we call the 4-year Bitcoin cycle, which also happens to correlate with the Bitcoin halving, which happens every 4 years. So Bitcoin halving is more like every 4 years, the rewards for miners is cut by half. Okay. If you don't understand mining, I'm not sure I can explain mining in this particular presentation. I'm not sure we have the time for that. But just know that for the cryptocurrency market to operate, we need people who are constantly validating transactions and confirming transactions before they go through. And the only way these people get rewarded is to be rewarded in cryptocurrency. So I'm explaining it in layman terms. Okay, they get rewarded in cryptocurrencies as they confirm and validate these transactions that are happening on the blockchain. So that's what I call mining. So with the Bitcoin halving, what happens is that every 4 years, the amount of Bitcoin that is mined or rewarded to these miners is halved, is cut by half. That's a way of reducing the rate at which the supply of Bitcoin is released into the market. And by so doing, we are cutting down supply so that we can drive price up. So when you look at the graph now, please, I hope what I just said is clear. What I just said, is it clear? Let me know in the chat box. This thing I just explained with the halving and reducing supply to push up price. Please, is it clear? Okay. All right, somebody said it's not clear. So let's take that again. All right, so Raphael, I'll go over it again. So I'm sure I'm not the only one. All right, so what I was saying is the bulls and the bear markets in the crypto season or in the crypto space is a theory that is controlled by the 4-year Bitcoin cycle, where every 4 years we have what we call the Bitcoin halving. And with the Bitcoin halving, you can check it up later to read more, but the summary of the whole Bitcoin halving is that on a daily basis, let me just put that way, as transactions are happening on the Bitcoin ecosystem, we have people who have to confirm and validate these crypto transactions. When we are sending money and when we are sending and receiving Bitcoins and cryptocurrencies, we have people who have to confirm or validate these transactions before they can happen. And the way these people get rewarded is usually in cryptocurrencies. So if it's Bitcoin, so people get rewarded in Bitcoin, right? So, and that is how, Bitcoin, when it was created, the total supply of Bitcoin that was created was 21 million. But this 21 million was not just released into the market. The 21 million is limited, but the quantity that is available in the market for people to trade with, it is released in bits. And one of the ways it is released in bits into the market is through mining. So people who validate and confirm transactions on the blockchain get paid in that Bitcoin. So the reserve Bitcoin that is there, that is what they get paid in. So they are being paid in bits from this reserve. And that is how Bitcoin is released into the market. Okay. But every year, every 4 years, what happens is that the amount of Bitcoin, let me put it that way, the amount of Bitcoin that each validator or each miner gets rewarded with for confirming or validating a transaction, every 4 years, that reward is halved. So if maybe somebody was getting 1 Bitcoin to confirm a transaction, every 4 years, they will halve it so that that same transaction, the person does, the person will receive only 0.5. Or if the person still wants to get a reward of 1 Bitcoin, the person will have to do 2 times more the transactions that he used to validate. And the reason why they do that is to slow the rate at which Bitcoin supply is being released into the market. So by releasing that supply, by reducing that supply in the market, we are trying to increase demand for the Bitcoin. And by increasing demand, what happens is that the price will automatically go up. Okay, so this is more like basic economics. Please, I hope it's clear now to everyone. Is it clear now to everybody? All right, so let's continue. So when you look at the graph now, you see the rise and falls. I don't know if you can see these red marks. There are some red lines that run vertically from top to bottom. Those red lines represent the Bitcoin halving. So if I can see clearly here, we had some, the halving was done in 2013. Then the next halving that came was in 2016. And then in 2020, last year, May, we had another halving. Now, when you look at this diagram here, you realize that after every red line, which represents a halving. So remember, if you can see, please, can you see the red lines? The vertical red lines that run from the top to down. Can you see them? Okay. All right, so that's good. So those represent the halving. So that's the 4-year halving of Bitcoin. So when you look at it, in 2013, I think the month is there, but I think I can't see the month very well. The first halving happened. You can see halving 1. If you look at the top, just by the first red line, you see halving number 1. The first halving happened. And when it happened, you realize what happened to the price of Bitcoin. These green candles and red candles you are seeing are the price action of Bitcoin, how it's rising and falling. And you see that immediately after the halving, some months following after that, the price of Bitcoin started shooting up. Then it went up, it went up, it went up. Somewhere around 2014, it reached a new all-time high. Then it started dropping, started dropping, started dropping, started dropping. Then in the middle, it reached a rock bottom. Then there was a slight rise in price again. And until 2016, then halving number 2. Until 2016, we had the second halving in 2016. And after that, you realize that there was another drastic rise in the price of Bitcoin, attaining another new all-time high price somewhere around December 2017. Then after that, it started dropping again, dropping again, dropping again, till the halving that happened just May 2020. May 2020, that one I was there when it happened. Then you realize that the price went up again, went up again, went up again. And the next halving is scheduled to happen in 2014. Was it 20? I think 2023. That'll be somewhere 2024 to 2024. Okay. So, but until then, you realize that it's the same cycle. So most people correlate the bull and bear seasons with the Bitcoin halving, where some months are following the halving, the price goes up, then we attain a new all-time high, then the price goes down for some years, then it rises slowly till the next halving, then we jump again, then we have another all-time high. So you see the short-term rises and falls, but in the long term, what you realize is that Bitcoin has always had an uptrend. And in the next slide, I'll show you in the next slide. In 2009, you can see the price of Bitcoin. So someone should type 2009, the first starting point. What was the price of Bitcoin then? Someone should type it in the chat box. Let me know you're seeing what I'm showing you. What can you see? 2009, the first point. What was the price of Bitcoin? If you can see, just type it in the chat box. 0.003. All right, thank you. Let's go. So that is it. So all these rises and falls have been happening. We've experienced at least, if you look at the chart very well, it's like we've experienced about 4 rises and falls, 4 bull markets and 4 bear markets. We've been experiencing these bear markets and these bull markets since then, but the price of Bitcoin keeps going up and going up and going up and going up. And every time we experience a bear season, in the next bull season following that bear season, we always attain a new all-time high price for Bitcoin. So this has been the pattern. And I'm showing you all these because, like I said, today's program is to build your mindset and to help you to have the right trading psychology so that in the long term, you can stay profitable and effective in your trading. Because until you understand that this is a cycle and this is what has been happening, you will join the panic sellers, give up on the industry, and later you come back when it's too late. Okay? All right. So please, is this clear to everyone up to this point? Is it clear? Is everything clear up to this point? Do we get the cycles very well? Do we understand that it's a cycle? And do we understand how the cycles play out? Do we understand how the cycles play out? Francis said sharp. Elisco said yes, please. Okay. Let me see the response. Let me know we understand, because this is the basis. If you don't understand this, going forward, anything else I say wouldn't make sense to you. Okay. All right. So that is it. So once you understand these cycles and how they play out, and you understand that what matters is that we have a long-term uptrend, then you should know, you should have peace of mind when you see that the market is dropping, because you know it is normal and it is eventually going to recover and it's going to rise back up. Okay. In the later parts, I'll tell you how you can take advantage of this, how you can prepare and build the mindset and psychology of an effective and profitable trader. And I also have some health tips at the last, so stay tuned to the end. All right. So now, how do you stay profitable? How do you stay profitable? How do you stay sustainably profitable in the blockchain space? First of all, you need to have the right mindset. And for me personally, I'm very passionate about mindset because it's literally the driving force of your success in anything you are doing. If you don't have the right mindset, any little challenge that comes your way, you give up. And mindset is more just like when you, I'm not going to define it, I'm explaining it so that we all get it clearly. Whenever you meet a situation, how do you perceive that situation and how do you react to that situation? That determines your mindset. The way you perceive situations and react to them, that determines your mindset. And there's a formula we call E plus R equal to O. E plus, so the E is for events. There are a lot of things I'm saying which are not in the slide, so you may have to be jotting things down. E for event, R for reaction, and O for outcome. So event plus reaction equal to outcome. So events alone do not make you who you are, or events alone do not determine what the end result will be for you, but how you react to that particular event will determine the outcome in your life. And that is where your mindset comes in. So how do you perceive situations and how do you react to them? That is what matters. Okay, so right mindset, then right psychology. Mohammed Idris Wumbe, you are raising your hand. If you have a question, please note it down. But if it's a problem, maybe you can't see what I'm saying or you can't hear me, just type it in the chat box so that I will know. I will just read it, whatever it is. But if it's a question, hold on. At the end, you have the time to ask. But if you have a problem, you can't hear or you can't see something, just put it in the chat box. I'll see it. So after mindset is the psychology, which is what the title for today's presentation is. You need to approach it with the right psychology, okay? And right attitudes, all right? So, and most importantly, you need to have the right network. That's why it's important to belong to communities. If you don't belong to communities where, like what we are doing now, you are benefiting from this session right now because you are in this community, where there are people who understand the markets, people understand the cycles in the market, and they can educate you on how to understand how these cycles play out and how you can position yourself in order not to be drastically affected by these markets. And you also need the right network because you need encouragement, not discouragement. So you don't need to be in a place where everybody is talking negative about the industry. That way you never grow, you easily give up. But when you're in the right network where even in the worst of circumstances, people are still optimistic and there's a lot of positivity, then you are positioned to actually be sustainably profitable and effective in your trading. All right. So virtues of the effective trader. So today's session is supposed to be short. We are almost getting to the end. Virtues of an effective trader. This is the most important part of today's presentation now. So if you are still with me, type following. If you are still with me, type following. This is like the crowning of today's presentation. So if you are still with me, type following. Okay, so Francis, Bismarck, Raphael. The same people, Brainy. Okay, Brainy, I've seen Brainy's post for the first time. The same people keep typing. The rest of you, I hope you are following, because this is very important for the markets, cycles that we are seeing at the moment. So if you don't understand today's session, you may be found wanting later. Okay. All right. So thank you so much all for the responses. So virtues of the effective trader. One, kill your emotions. Kill your emotions. There's one thing that my coach Hartwell and founder of Refika will always say. You don't go and sit on your computer to trade after you've just had a fight with your wife or your boyfriend or your girlfriend, or you've just had a broken heart, and you go and sit on your computer and say you are going to trade. That trade is likely not to go well. For you to be an effective trader, you must detach your emotions from your trading and approach it from your understanding of the market cycles and based on rational and well-researched decisions. You don't trade emotionally. If you trade emotionally, most of the time you will lose. So you must detach your emotions. Instead of trading emotionally, rather try to understand the market cycles. What has happened in the past? What is happening now? What have people done to cushion themselves against these things? But if your emotions just swing with the market, whenever market is falling, you panic, you sell off, then when you see market rising, then you come and buy. What you realize will happen is that most of the time you end up coming to buy high and sell low. But we all know the basic rule of crypto trading is buy low and sell high. Okay? So you need to detach emotions from your trading activities and approach them with rationale and understanding of the market cycles. All right. Next point, invest in knowledge and understanding. In this space, self-education is very, very essential to your success. It's not everything that someone can teach you. So your self-education is very important. So if you have to even go and pay money for someone to teach you something, to help you understand the market better, do it. Make time to sit down, go online. We are in the information age. Almost everything you need to know is on YouTube. It's on the internet. Make time, go online, research about areas of the blockchain that you still don't understand and understand them. Most of these things I'm saying, I learned them by myself surfing the internet. The 4-year Bitcoin cycle is on the internet. You can find it. The debt cycle is on the internet. You can find it. Okay? Everything is there. So invest in knowledge and understanding. When you have that knowledge and understanding, it builds wisdom. And once you have wisdom, it will help you to better detach your emotions from your trading activities. For lack of knowledge, my people perish. So don't lack knowledge. Make sure you get the knowledge. Invest time, invest resources to acquire the knowledge that you need in the industry. All right, next point. Start where you are with what you have. This is a very important point you must note. Very, very important. These are some of the mistakes I personally made, and I'm sharing this with you so that if you are still not so deep into the blockchain and cryptocurrency market, you can start from here and then avoid making the same mistakes. Start where you are with what you have. Don't cut your coat more than your size. Don't cut your coat bigger than your size. And don't also sit down thinking that one day you'll get plenty money, bulk money that you don't need to do anything with so that you can now start trading or building your portfolio. If you can afford now to invest $10 into cryptocurrencies every month, do that. Don't force yourself to go and invest $50 when you don't have $50. Okay? Don't use your feeding money to go and trade. Because later when you don't have food and you must eat to survive, where else do you think you're going to get the money? You go back to your portfolio and take something out of your portfolio. And God forbid, if the time that you are in need, the price of the cryptocurrencies you bought have fallen and you are desperately in need of money, you have to sell them off. What it means is that you bought them at a higher price, you are coming to sell them at a lower price. So what's going to happen? You are going to take more out of your portfolio than you've put inside. And if you keep taking more than you put inside, your portfolio will keep decreasing. It will never grow. So when I say start where you are with what you have, it's in two parts. One, trade with what you can afford to. In fact, we always trade with what you can afford to lose. But don't also sit down and delay, procrastinate building your portfolio because you still don't have a lot of money. No matter how little it is, start and build slowly. Little drops of water will eventually one day make a river or an ocean. All right? Then be realistic and conscious about your income flow. This one is somehow related to the point of starting where you are with what you have. Be realistic and conscious about your income flow. Okay? Here, it requires you to have, some kind of budget. In the past, I've worked without budgets and I've suffered, okay? But if you can be realistic, you know that, maybe I receive 200 cedis a month. And for me to be able to live and eat and survive, maybe I'll need to reserve about 100 cedis for feeding. So you know that 50% of that 200 is going into feeding. The remaining 50%, they can decide that, okay, I'll invest the 25% in, say, cryptocurrencies. Then I'll save the remaining 25% for family issues and then for other fiscal investments. So you have to be conscious about your income flow. And whenever money leaves and goes somewhere, you should be able to trace back. If it's an expenditure, it's an expenditure, it's not coming back. But if it is an investment, then you should know where it is going and you should be able to trace it in some months or years' time to see how it is doing. So be realistic, know your income level, and know what you can afford to invest and what you can afford to keep for your survival. And check where your money is going, where your money is coming from, and where your money is going to. If you can be that realistic and that conscious, most of the time in the dip, in the bear market, you won't have to go back and be taking money out of your portfolios, which is what a lot of people do, because they push all their monies there. And when the bear market comes, then they have no other means to survive. They go and they sell all their portfolios, everything in their portfolio at very low prices than they bought them. And once that happens, you've lost. You are going back to ground zero. So take note of these points. Please, is this point very clear to you? Is it making sense? Is this point making sense to you? Is this point making sense to you? Let me know in the chat box. All right. So let's take note of that. And of course, the next point is related to this. Never compare yourself with someone. Never compare. There are people that have come after me into this crypto space, and their portfolios are way, way bigger than my portfolio. But the point is, you don't compare yourself to someone, because your background and that person's background are not the same. So if there is, maybe there is a pre-sale and then somebody says me, like we used to do with the crowdfunding, and somebody says, I'll contribute, say $100 to the crowdfunding for the pre-sale. And you know that all your money right now is not even up to $100. But because somebody is putting $100, you also want to force yourself and put $100. So you even go and borrow money to come and put inside. Or your last money on you is $100, then you go and clear your account and come and also put it inside in the pre-sale. That pre-sale might do well, but it might take some time, because most of the time they lock up pre-sales. So you realize that to get to a point, you are really struggling, and that person you compared yourself to and made that same decision, the person is still comfortable. Or they show you somebody's portfolio and the person's portfolio is $100,000, and you start feeling like maybe you are not doing something right, or you are losing. I mean, somehow you feel like you are not doing well because somebody has done better. That kind of comparison is not going to help you if you are to grow in the space. Know yourself, be realistic about your income level, and don't compare yourself with someone else. But just make sure that you are doing the best possible for your portfolio to grow. Be honest and realistic. Be honest with yourself. Don't also spend all your money on expenditures and spend all your money on liabilities and come and say we are not the same, because that is also possible. So be realistic and be conscious and never compare, but be truthful to yourself about your income flow and about how you are spending your money. If you want to grow your portfolio, make sure you invest, but invest wisely and realistically. Okay, great. Now, next point, we're almost getting to the end of the point. Save in USDT and use DCA. This is the best way to build your portfolio in a bear market. Now, if you are in Ghana or Nigeria, you know that our currencies keep depreciating in relation to the dollar. I think at the end of this year, the dollar was around somewhere around 5 cedis, if I'm right. That's at the beginning of last year, but here we are. It's almost heading towards $7. So I mean 7 Ghana cedis. $1 is now almost 7 Ghana cedis, around there. So once you know your currency is depreciating, don't keep packing your money in your local currency. Pack your money in something that will give you leverage. And once we are in the blockchain space, saving in USDT saves you a lot of trouble. One, it's almost like you are saving in dollars, but you are not saving in fiat dollars. So you don't need to go and create a dollar account and go through all those bureaucracies. USDT is like dollar version on the blockchain, because at any point in time, that's what we call a stable coin. So you can save in stable coins, USDT, USDC. There are so many of them. Save in stable coins and then monitor the market. Now, DCA is dollar cost averaging. So what dollar cost averaging simply means is that you buy in bits, buy your portfolio in bits. So as we are currently experiencing some falls in the market, if you have saved in USDT, and let's say you have about $100 sitting in your portfolio in USDT, it's not held in any cryptocurrency that the value will fluctuate. Now, as the market is dropping, there's a particular coin you want to buy. So you look at the market, when it drops to a certain level, you use about maybe say $20, buy some and hold it. Then you still monitor the market. If it looks like it's still going to fall, if it falls again, maybe you buy like another $20 or another $30 and add it to the one you already bought. And you still hold some of your USDT. The market keeps dropping like that. You keep buying and buying little by little. Whenever there's a drop, you buy. Whenever there's a drop, you buy. That's what called dollar cost averaging. You buy in bits. So by the time the market is recovering, you have a lot of that particular token. And because you are buying in bits as the market was dropping using dollar cost averaging, you have a lot more of that token than if you had just used all the money, the entire $100 to buy one time. Okay, so this is one way you can make use of the bear market. In a bear market, the best way to build your portfolio is to use DCA. And you can take advantage of a bear market if you already have USDT saved for you. Because once you have USDT ready, it means that any point in time you can move into the market and you can buy. All right, so save in USDT, use DCA. We are talking about cycles. So this is the best way you can take advantage of the cycles. Imagine when there's a bull market and you are in a lot of profit. You take your profit, which brings us to the last point. Always take profit. You take your profit, you save it in USDT, and you wait when the market drops. You use part of that profit, buy back some of your coins and hold them again. In the next bull run, you are likely to have a higher or new all-time high price, which will give you even more profit. So you always take profit. Of course, you need some to live and then build houses, get married, buy cars and all that. But you always reserve some of your profit, plow it back, buy more when the prices drop and take out what you want to spend. As you keep doing that, no matter how the market goes, and you understand that bull season will always come, bear season will always come, you'll always be prepared to take advantage of either cases. Either take profit when the market is rising because you bought when the market was down, or buy when the market is down because you took profit when the market was up. Please, are we together? Are we together up to this point? Are we together up to this point? All right. And are we learning something? Have we learned something so far? Okay. All right. So let's go. All right. So before I go, I just want to give you, my coach asked me to add some health tips for us before we go. So within the next 2 minutes, I'll just quickly give you some health tips. Then we'll get to the end of the program. So this is something that is very common in men. It's health tips within the next 5 minutes. So open your ears widely. I have something for the guys and I have something for the ladies. So everyone gets something to take away. Now, in both ladies, in both males and females, there are two major problems that we have, okay? And it has to do with our reproductive cycle, our reproductive system. So I'm just going to say something about the males, and then I'll say something about the females, so that it's not only cryptocurrency, but we'll also take, we'll also get something for our health before we leave here tonight. Just give me a moment. All right. So in men, in the reproductive system of a man, we have something called the prostate. Okay, it's one of the essential structures. The essential part of your reproductive system as a man. Now, usually what happens is that when you are born, okay, when you are born, the prostate grows to a certain level. And by the time you reach your teens, we call that puberty period. Within the pubertal period, the growth of the prostate slows down drastically. And by the age of 35, then its rate of growth starts becoming exponential once more. And this is part of your reproductive system, okay? So per the location of the prostate gland, it's a gland, per its position, when it starts growing after age 35 and it grows out of place, it starts compressing on some of the structures around within the reproductive system. And that can cause a lot of problems for a lot of men. Now, the research says that when you talk about prostate cancer, the thing is, as it's growing, we have what we call the benign state, where it grows too much, but it's not yet a cancer. It has not reached the state of a cancer yet. So it's a benign prostatic hyperplasia, benign growth, benign outgrowth of the, what do you call that? The prostate. But it can compress on a structure we call the urethra, where your urine and your semen passes through to come out, okay, as a man. And when it compresses on it, it can affect your whole reproductive system or your whole, what do you call that, urinary system, affecting the way you're able to urinate and even affecting your sexual performance as a man. Okay, that's why it's important, and that's why I'm talking about this. And according to the statistics, it says that prostate cancer is the second most common cancer in men, and it is the 5th most common cause of cancer death in men. So it's it's not just about your reproductive system or your ability to urinate, it can kill you. And we need to prepare ourselves and make sure that we are protected against this. Now, what are the risk factors? What are the risk factors that exposes you to prostate cancer? So first of all, we have age greater than 50 years. As I said, the exponential growth of the prostate usually occurs after age 35. So by the time you are reaching 50s, most men at that age have either the benign growth of the prostate, or it might progress to cancer if it was not detected and treated early. So age greater than 50 years, then race. We, those of the African descent, we are at high risk of prostate cancer. So your race predisposes you, and your lifestyle. So it has to do with diet, your exercise level, and then generally your exposure, where you find yourself, because sometimes by virtue of the fact that you find yourself in an industrialized area, you are exposed to certain chemicals and certain radiations, which can also lead to that. Your lifestyle, smoking, alcohol, your diet, whether you eat too much carbohydrate and all that, all those things come into play to put you at risk of developing prostate cancer. Then we have family history. So if you are a man and your first degree family relatives, when we say first degree, we are talking about your parents and your siblings. So your parents and your siblings, if you have people in your family who have had history of prostate cancer, you are prone to also get it because there's a familial link to it. And if in your family, either from your father's side or your mother's side, down to 3 generations, so your father, your grandfather, down to your great-grandfather, if there've been a history of prostate cancer in those 3 generations before you, you are also prone to get it. So you can, once it's about lifestyle, you can protect yourself or engage in healthy lifestyles that wouldn't expose you to these things. But if it's familial, the best thing you can just do is make sure that after age 45 going, you can get routine screening. We have what called the prostate-specific antigen screening, which you can do on a regular basis to detect it early if it's there, so that they can treat you early, so that it doesn't progress to the dangerous states. And for prevention, you can look at your diet. There are some research that says that people who eat oily fish like salmon and mackerel, there's a percentage, the risk of getting prostate cancer reduces by about 57%. leafy vegetables in our part of the world, our pumpkin, our contombre, and all those ones. You can eat that a lot. It also helps to reduce your risks. Taking coffee, some research says that taking coffee also helps. Yes, coffee. But in order not to get the other side effects of the coffee itself, they're also saying that even decaffeinated coffee is still good for you. So if you are not the coffee type, you can go for the decaffeinated type of coffee if you want. These are all based on research that I'm just presenting to you. And fun fact, very interesting one, they say that sex also is a good preventive measure. And a research that was done indicated that men who had sex and ejaculated about 21 times within a month, they reduced their risk of getting prostate cancer to about 33%. Okay. So depending on your level of morals, whether you are married or not, and what your moral compass is, you can do with this fact whatever you choose to do with it. All right, then I spoke about the routine screening, especially after age 45, you can check regularly to see if you are developing any prostate cancers. Please, the men, have you learned something today? The men in the house, have you learned something?
Yes.
Okay.
Yes, we have.
All right. So that was just a little health tip for you.
Yes, we have learned a lot.
All right. So now, ladies, do you have any ladies in the house at all? Any lady in the house? Any ladies in the house? Let me see. Oh, you need it. Okay, so let's go. You go and educate them. All right. So for the ladies, their version of prostate cancer, because they don't have a prostate. Ladies don't have prostate. It's only men that have a prostate. What we call the cervical cancer, which is the third most common cancer in women. And it is the leading cause of cancer death in women. Okay. So it tells you the reproductive system is very important, not just for what we know it for, but problems there can eventually affect your whole life. All right. Oh, and one thing I failed to mention for the prostate cancer is how do you maybe pick up certain signs that your prostate is growing out of place? The basic ones, there are a lot, but I'll just mention two basic ones. One is if you realize a decline in your sexual performance, it can be one of them. And the second thing is normally as a man, when you urinate, there's this thing we used to do as kids. You'll be competing, you are urinating, and then you remove your things and you point it up. And you want to see whose own can go farther than the other. Oh, I hope you get the point I'm making here. I'm speaking in parables, but I know you understand. Those who have played that game before. So you are urinating and you want to see whose urine can go the farthest. That way, that's one way of checking if your prostate, there could be any issues with your prostate. Because once it starts growing and compressing on that structure, the urethra, the one that brings out the urine, you realize that the distance to which your urine could go starts reducing. And also at a point you start restraining, like you have to use a lot of force when you're about to urinate before the urine will come out. So when you start picking up those kind of signs, then you may want to get yourself screened or get to the hospital. Okay. In the severe states, you may find urine in your semen or blood in your urine or blood in your semen and all that. But those are advanced stages. So that is how you can detect and how you can protect yourself. Now, for the cervical cancer, I've already mentioned the facts. It's the third most common cancer in women and is the leading cause of cancer death in women. Risk factors that expose women to this, we have infections such as infections with human papilloma virus and HIV virus, so mostly viral infections. Smoking, women who smoke are exposed to that. Prolonged use of contraceptives. Prolonged use of birth control pills. Greater than 5 years, it predisposes women to getting cervical cancer. Multiparity, women who have given birth to more than 3, it also predisposes them to getting that. And once again, multiple sexual partners and then family history once again. If there's a history of cervical cancer in the woman's family, especially the mother's side, she has the likelihood of getting that. So once again, to protect them, of course, once you know the risk factors, you avoid them. So lifestyle changes with smoking, alcohol, and all that. Avoiding prolonged usage of the contraceptive pills, and limiting your number of births. Okay, limiting the number of births. Not in Africa that one woman can give birth to 8 children. So let's look at that, and then generally keep yourself healthy. And for the ladies, they can check if between the ages below age 21, they don't need to go for cervical cancer screening, but between age 21 to 29, they can go for cervical cancer screening about once every 3 years, just to check and be sure they're okay. Then as the age by around age 30 going, they can increase it to maybe some 5 years. Every 5 years, they go and check. If by age 65, the person has no signs of or has never been diagnosed of cervical cancer, the person can stop screening. All right. So that is that for health tip today. That's that for health tip today. And before we end, let me just call on our founder of Refika, my coach and very good friend and brother, Hartwell, to give us a word. Before I conclude on my presentation today. So, Hartwell, if you are around, you can.
Good evening. Yeah, I'm around. Good evening.
All right. Good evening. We can hear you.
I am for such an awesome.
You are breaking. Okay, I think possibly where he is, the network is not good.
Some presentation. I was not part from the beginning, but I radio that whatever we've learned today, the most important part of it is for us to go put it to use. Okay, that's the most important. And I love the health aspect of it. Prostate cancer and cervical cancer as well. So whatever you've learned on the call throughout the whole market psychology into the health aspect as well. So let's make sure we pick the valuable information that has been shared with us by Doc and then make the most of it. All right. So thank you.
Okay.
And globally as well too. So hopefully next week there's going to be another session. You don't want someone. This Sunday meetings is going to be open for the entire world, whoever you can invite to become a part of it. And they're going to be dealing with different kinds of topics as they come by. So I just want to encourage us that let's keep up whatever we are doing. And don't worry about the market dip that we are experiencing now, because very soon, just give us, for me, I think in the next 3 months we would have recovered. But the technical analysis people will tell us the best of it. And we are just waiting for institutions to start to pour in some liquidity, which already we've seen money moving into the exchanges. Right. So hopefully things will get better. But I hope today's meeting has been able to become helpful for all of us to be able to manage well with the market psychology. So with this said, thank you all. Let's go back into the communities and share with the people whatever we learned on this course. So from me to you, from wherever I find myself, and to each and everyone, wherever you find yourself, good morning, good afternoon, good evening, and we'll catch up on the community page. Thank you very much.
All right. Thank you so much for the word. I can see you are busy somewhere, but you made the time for us. Thank you. Okay, so let's round up. So as I always do, I'm very passionate about finance. I'm very passionate about youth development. I'm very passionate about mindset development. So this is a book I've put together on those areas. It borders on the themes of mindset development, financial literacy, personal development, okay? And the website, my website is there, themoneyfarmacademy.com. Basically, the book, The Money Farm, as the name goes, is that the basic idea is money is seed, okay? Money is seed. And depending on where you sow that seed and how you nurture that seed, that will determine the fruit is going to produce at harvest time. So that's the whole basic idea for young people who are starting out in life and trying to build your finances. You can get a copy of the book from my website, www.themoneyfarmacademy.com. And then you can read that. It's just a practical guide to building long-term wealth and then building a strong foundation for your finances. All right. And if you need a hard copy as well, you can just let me know after this in the WhatsApp, and then we'll link up. Now, before I go out, leave you with this. As you know, it's from the main community, from our main community, Crypto Elites. And it's just a summary of all that I've shared with you today. In a bear market or when prices are falling, do not panic, okay? Do not panic. It's a cycle, so you need the right psychology, and I want to believe I've done a good job today helping you to have that psychology, the right psychology towards the market, okay? Have the right expectations. Know that it's a cycle. It will always rise and it will always fall. Okay, what goes up must come down, what comes up must go up. So always know that, and keep your expectations realistic. The market is volatile. I mentioned that in the beginning, and understand that it moves in cycles. So whichever cycle we are in, you always be ready for it. So I think somebody wants me to send something. The person has put the number, so I can't be contacting people one by one. So what I'm going to do is I'll type the websites here. And then for those who are not in the main community, I'll equally put my WhatsApp number here. So I'm just typing that right now. So you can take them and then you message me on WhatsApp. And then whatever issues you want to discuss with me, we can discuss that. So this is my number. The name is Alpha Josie or Dr. Josiah. So you can message me and then we'll talk. And the website to the book is www.themoneyfarmacademy.com. All right, so every information is there. So you can just take it now before the meeting ends soon, and then we can talk. All right, so with that, I leave you with this picture. And if you have any questions, you can ask. If there are no questions too, then I thank you so much for your time. And I hope you've learned a lot from here that will help you to go through the various cycles of the market and to stay profitable and then keep growing your portfolio in the blockchain and crypto space. Thank you so much. If you have any questions within the next 2 minutes, you can raise your hand. I'll unmute you and then you ask your question. If you have a contribution as well, you can also raise your hand and then we'll unmute you. You can also put it in the chat box if you want, and then we'll read it out. So within the next 1 or 2 minutes, if you have anything, you can raise your hand. I'll just unmute you so that you can speak and ask your question or your contribution.